Sunday, February 8th, 2015. This will be a weekly Outlook webinar. Highlight a couple stocks I'm looking at and take some of your guys' questions. First one I want to check out is GoPro. GoPro reported earnings on Thursday after the close, and I want to show this 3-minute chart to show you the after hours action from Thursday, and then we'll dive into the setup a little bit here. So you can see after hours on Thursday, the stock had closed during the session right around 55, between 54 and 55, and opened up after hours right at 60 bucks, but then just got sold into right off the bat. So an initial positive reaction was viewed as a selling opportunity by the market. You can see this nice move down to 52, little sideways at 52, and then just a huge crack that took the stock from 52 down to about 46, and you stayed between the 46 and 48 range all after hours on Thursday. And then Friday here, you opened a little bit higher, but you still gapped down. You were in the 48s, couldn't get back above 50, and then sold off from about 1 o'clock in the afternoon into the close, and actually closed right on the lows in GoPro. Okay, a nice down move. So GoPro really didn't give a great short intraday on Friday unless you were already short the stock coming into the day. The intraday trading activity wasn't that great, and this is a case where I think the days that follow the earnings report, i.e. tomorrow, are going to offer much better trading opportunities than we saw on the day immediately following the report itself, which was Friday. This chart, though, to me just looks broken. You're breaking below a psychological level as far as 50 bucks goes, and to me, as long as you're below 50 on GoPro, which is this line I've got here, then you're going to be following this trend line down, and I'm looking for a move back down towards 45 to 40. You can see the volume, nice high volume came out on Friday, and again, you closed on the lows. So to me, simple setup on GoPro moving forward. I've got a short bias on this thing as long as you're below 50 bucks. You get back above 50 bucks, we can talk about a base and bottoming opportunity, but otherwise I'm looking for GoPro to be able to trade back into this range from its initial IPO, kind of between 43 and 38 bucks or so. You look at the price action during July and August that I just highlighted, that's ultimately where I think GoPro can go. The stock is beaten down, but don't underestimate how low a stock can go. Just like when it was ripping higher in August and September, you would have been foolish to underestimate how high it could go as you went from 40 bucks to just about 100 bucks. So I like GoPro. My favorite short in my list right now of the 7 stocks I follow is definitely GoPro, and it's really the only one that's just an outright short right now. So again, 50 bucks is the key level to keep an eye on moving forward. Ultimately, I think 45 on down. You break 45, we can start looking for a move towards 40. Looking at Amazon. Amazon saw a good continuation last week off of earnings continuation, continued momentum, whatever you want to call it. But you did kind of stall out the last 2 days around 375. So Amazon may be setting up to go sideways or pause a little bit, but to me this is a stock that broke out very clearly, moved above its previous 6-month highs, and now Amazon to me is a buy the dip stock as long as you're putting in higher lows. So maybe you need to see where a pullback takes it to, but you had this little 3-day congestion post earnings reaction between 360 and 365, just circled it. So in here, that's where I look at Amazon. Maybe you target a pullback into that range, but to me, as long as you're holding 360, Amazon looks really, really good to keep on going to the upside. And even better would be if you just hold above 370, then that would just be even more momentum. And I think you could see Amazon back at 400 bucks pretty soon. I want to look at a monthly chart. I've got all these damn trend lines here. Let me get some of these out of the way. But you can see this one downtrend line on a monthly, clear breakout above it, and now you are regaining an uptrend line. You can see this was an uptrend from the 2012 to 2013 lows that you came below. I had another kind of a secondary uptrend line that you never broke. Alright, so bottom line though, Amazon long-term trend is to the upside. You had a little pause in that long-term trend. Well, not a little. You paused for about a year and just basically consolidated for a year between 350 and 300 plus or minus 10 points. But now you're breaking out, and now Amazon looks pretty good. Okay, so Amazon, I said GoPro is my favorite short in the market in my list. Amazon is my favorite long in the market in my list. My girlfriend and I spent the weekend binge watching Parenthood, which, not a great show. She likes it and it keeps it quiet, so I obliged. But point is, it was on Amazon Prime, and I'd never really watched stuff on Amazon Prime before. So sitting there, I was like, this is making me kind of even more bullish on Amazon. Anyways, so bottom line, stock broke out. Long-term basis, short-term basis, has momentum behind it. Watch dips on this thing. She looks pretty good. Looking at another breakout that happened recently from Netflix. But Netflix is a little kind of interesting to me because it's actually starting to stall underneath 450. And if you stay below 450, I'm looking for one of two things. Either just consolidation, kind of slow move down, or you might be setting up to pull back into the 420 range on Netflix. I'm waiting on a 440 breakdown personally before deciding to really look at it as a short. I think you need to break 440 cleanly and give up this bounce you had just made this past week to really view it as a short. But it does look, slightly vulnerable here after a really good move. To me, you got to get back above 450 to show stability again to the upside on Netflix. But if you can get 450 stability, then she looks really good to go up towards that 470, 480 range, which is the all-time highs from back in August and September. So Netflix intrigues me relative to 450. I'm waiting on a 440 breakdown before targeting lower prices. I want to talk about Tesla briefly. Tesla has earnings this week, Wednesday after the close. So you've got a lot of premiums on Tesla, and I tend to wait until premiums come out after earnings before getting positioned. However, I'm going to swap to my screen over here to show you guys the options I'm watching, because I want to talk about this trade idea I have. I did this last time and it worked out, and that is shorting very deep out of the money puts on Tesla. So I'm looking at these 175 puts. They closed Friday at 30 cents, 34 cents. I'd like them to get up above 50 cents if I'm going to short them. But to me, I like this trade. If these puts get above 50 cents, I will look at shorting a couple of these because I like Tesla long term. If Tesla went to 175 tomorrow, I would buy the stock hand over fist confidently and look for a bounce. So the reason I'm comfortable shorting deep out of the money puts is because in the worst case scenario, these get exercised, I would then be given 100 shares of Tesla at 175 for each contract that I owned, and that is something I'm comfortable with. The important thing with these trades, if you do them, and I've only done them one time, but again, I want to get more experience and looking at doing it again if I can get an entry point that I like. The important thing though is don't short more than you can afford. So I'd probably really only short 2 or 3 contracts, because that would be 100 shares at 175 each. We're talking $17,500. So 300 of those, I'm looking at $50,000 give or take in principal, and wouldn't want to shell out more than that. Probably even just stick to 2 contracts and sit with 35,000 or so. I know it sounds like a big number, but your risk is much different with stock than it is with options. I'm just trying to highlight the fact that when you do it, some people look at these and they say, oh, okay, I could short 10 of these at 50 cents. That's an easy $500. And if it goes to 175, I'll just take the shares at 175. Yeah, well, the problem is now you're talking 1,000 shares at 175, and now you need 175,000 bucks. I don't have that type of capital. So just keep that in mind in case any of you are looking at a strategy like that as well. But again, the main reason I do it is because I would buy Tesla at 175. I've had a good till canceled order in my IRA account sitting at 175 for like 5 months. I got excited in the middle part of this month when you got down to 185 because I thought it might fill, but still hasn't filled. So that's what I'm going to be looking at doing on Tesla for an earnings play. My live trading members will be talking more about that tomorrow, Tuesday, and Wednesday. Bottom line though on Tesla, directional trading. I'll be waiting until the earnings reaction. And the key stuff with the earnings reaction though is just this base that you have around 200. You dipped into the 190s, 180s briefly, but I just call it a 200 base. And this resistance that you've got right up here at 230. In order to get some really good clean action on Tesla, we're going to need a breakdown below 200 or a breakout above 230. So those are going to be the two levels I'm watching on either side going into this report. And where do we go Wednesday after hours? Final stock to check up on here before I take any requests. Actually, I've got a couple dollar stocks to look at. Is Google. Google is interesting to me because it hasn't done anything for the last 2 months, last 3 months really. If you look at where it was in mid-October, it was around 520 to 540. You look at where it was in November, got up to 550, but then in December back into that 520, 540 range. In January, 520s to 540s. Now here we are in February, hanging out 520s to 540s. So something's got to give sooner or later on Google, and I like the setup once and if you can either get above 540 or once and if you can get back below kind of this 520 range. You've got a nice defined channel. I'm not big on trading channels. I've actually been looking at selling premium on Google a couple times and it's worked for the most part. But if you can get a breakout above this channel, above 540, you'll notice it's also in line with this uptrend line that it lost. Then I think you could see a nice move back up towards 560s. And if you could get a move to the downside below 520, looks like you can go tag that earnings day, pre-earnings day low right above 500, and then 500, of course, key level on Google. For me going into this week though, GoPro definitely going to be on watch on the short side as mentioned. Amazon dip opportunities, Netflix over under 450 action, and then Twitter. Not going to spend much time talking about Twitter, but Twitter's just a momentum trade, broke out. Need to see where support establishes itself. You had a huge move up 16% on Friday, so there's no level that I can point to and say, okay, now you need to hold this level. Because if I did, I would say something like $42, and that's 6 points away. So, and obviously if Twitter drops 6 points from here, I better have shorted it. So at any rate, Twitter's one that I'm just kind of waiting to see what the action looks like tomorrow and see how stuff develops. A couple dollar stocks to look at that have been liquid recently is Gene. And Gene is interesting because we talked about it last week at this time. And what I had said is that every time Gene has gone higher, it's ultimately gotten sold into. And if you just look at a weekly chart, you can see that pretty clearly. Long-term downtrend. Stock has had multiple bounces over the years. You're looking at a weekly chart that starts in 2011. This is 2011 back here. And you can see, for instance, beginning in 2012, here's number 1, move up, got sold into. Then in April 2012, there's number 2, move up, got sold into. Then in April 2013, there's number 3, moved up, got sold into. July 2013, moved up, got sold into. January 2015, 14, number 5, move up, got sold into. And now you're getting another move up. However, this time you haven't yet gotten sold into. So that's maybe a difference in trend on Gene. Still has to prove itself a little bit more, but definitely make note of the fact if you're trading these sub 5 stocks, hey, Gene, this time you're not getting sold into right away. It's maybe a bit different characteristic. To me, the key trigger on Gene is this spike high right around 450. If you can get back above 450 on Gene, you could then have a beginning of a trend reversal and make a big move up, like really big move up, because I think there's probably a lot of short interest in this. I don't trade this stock, so I haven't looked, but I would guess based on the historical trend, a lot of people are looking at this as a shorting opportunity. And to me, it still is versus 450, but if you start getting above this 450 area, that's where I think you get a good short squeeze on Gene. So watch it here, because if you don't get above 450, ultimately I would expect the historical trend to prevail, and the stock could easily find itself back down near 250 all the way down to 150. So if you're into the sub 5, sub 10 stocks, Gene should definitely be on your watch, because I expect some direction here, whether it's a 450 breakout or ultimately a rejection and leg back down. Looking at FTR. FTR, nice action, nice trading action. Not the best daily chart, but if you look at this intraday chart, it looks like it's been making some good swings. Look at Friday's action, for instance. You gapped up to $8, and then you just got sold into from $8 all the way down to 740s, 750s, and then a big bounce off of 750s to then close back up near $8. So if you're a scalper, you like that activity, this is a good stock to be tracking. FTR, Franklin Temple Randy. And most importantly and best is the volume is tremendous. You traded 71 million shares on Friday after trading 37 million shares on Thursday. Volume has been increasing overall, and so good tradable stock here on an intraday basis. Looking a bit more intermediate term, I know you're at 6-month highs here, so want to see if you can hold this move. You broke above the July highs and the November highs from last year, and once you got a break above that, that seems to have triggered a further move from 7 up to 8. So let's see now, as long as you can hold $7, FTR can be establishing itself for further upside towards $10 overall. If you were to lose 7, I would look for a pullback back down towards 6 to 5. I want to look at a longer term chart here and see if that gives a different picture. So the weekly, you're coming up near 5-year highs, 4 to 5-year highs from 2011. Let's look at a monthly. Alright, so bottomed out in 2012, and you've been rallying since. You can see this $8 level. This could prove pretty tough resistance, because you can see from 2008 to 2011 just about, you spent a lot of price action right around $8. So this is a key area. I do like the trend going into this though, and if you can, like I said, stay above 7 and eventually get an $8 breakout cleanly, you see that the 2010 high is right underneath $10, and if you get above $10, you could be going back towards the all-time high up near 16. That's obviously a much longer term picture, but that's what's in the works here if this daily chart can stay attractive. Lastly, I want to look at the S&P 500. Futures are down 10 points at the moment, so right now we're looking at an open around 20, 2048-ish or so. On the S&P, we closed at 2055. And the market, it's been a frustrating market if you're trying to play a trend, because you don't have a trend here over the last 1 to 2 months. You are in a pretty clear channel, 2000 on the low end, plus or minus 10 points, and 2050-ish on the high end, plus or minus 10 points. Who's been paying attention and can tell me the key level that I'm following personally so far this year on the resistance side of things, that until we get stability above this level, I'm not going to be looking for a major breakout? Any guesses? No. 2050 is closer than 1995. Think about last year. Y'all got to know these numbers off the top of your head. 2058, that is the 2014 close. We have yet to go green on the year consistently in this market, and until we get a solid red to green move on the S&P on a yearly basis, I'm not looking at upside. Because I'll remind you guys again, we're going to go back and look at last year's price action. Okay, last year the S&P, I'll tell you, it closed 1848 was the close. Sorry, 2013 the close was 1848. And if we just plot a trend line here at that close, you can see we had a very similar market at the outset of last year that we do this year. And notice how 1848 capped the market multiple times in January, led to a pullback, but then a bounce, and then it took a lot of churning around that break-even line, but you know, from March to May we were getting stability above the break-even line, and that ultimately led to a powerful move up towards 1950 to 2000. So very similar setup right now on the market. Again, if you just take a trend line, or a horizontal line rather, and you plot it at the break-even line from last year's close, and you look at the red to green, you can see it already on Friday. You know, we came above it on Thursday, but back below it on Friday. And this is 1, 2, 3 times now we've tried to go into the green on the year and gotten rejected each time. So you know, the bulls still need to get that stability above here before we can start looking for a move back up towards the all-time highs near 2100. So that's maybe bad news for the bulls, but the good news is the bears have been pretty lousy themselves. Each time we've gotten down to 2000, again, 1, 2, 3, market has failed to really break down. So this channel needs to resolve itself on the S&P 500 until we get stability above 2058. Not looking for a big move up, and until we get stability below 2000, I'm not looking for a big move down. Just a channel. Do you want to try and front run the channel? Be my guest. I wait personally for more clarity. I'll always generally sacrifice an entry point for more clarity. So right now, you know, if you buy the market on a dip and then the market breaks out, that looks good. Me, if the market dips here and then breaks out, I'm not going to buy it until it breaks out. Obviously the better entry point will have proven to have been buying it on the dip, but that'll be hindsight talking. I would rather wait on my entry in exchange for certainty. I put a premium on certainty. Some people put a premium on entry, so it just depends on your style. Alright guys, that's what I've got. Are there any requests or questions? Nope, questions can be on anything. How do you set up chart indicators on TradeStation? You just would right click on your chart and you can do a couple different things. You could do insert analysis technique, and that will give you this gigantic list of indicators: advanced decline line, advanced decline ratio, algo stuff, oscillators, Bollinger Bands. I mean, TradeStation has a dictionary of technical indicators and techniques that you can look at. You can also insert your own strategy. If you have developed one, you can upload it, or you can use one of theirs. You can see they've got all types of strategies here. So just mess around with it. I personally don't use any indicators other than implied volatility at the bottom and just trend lines and volume, I guess. Everything in TradeStation though is done by right clicking and then doing one of these inserts. Any other questions? Alright, not seeing any other questions. Futures just broke to a new low, so we'll see what the market has in store for us tomorrow. But keep it up, keep working hard, guys. Keep studying your orders, see what's working, see what's not working, and always try and improve. Alright guys, I'll see you tomorrow morning. Thanks.